to the Property Frontline. Today I'm here again with Scott Hoaxang for our Market Watch series. Hi Scott.
Everyone.
In this episode we'll be reviewing the Australian property market performance for December 2024, and also we're very excited because we'll be covering off the 2025 market forecasts. So what's coming up and what should you be thinking about if you're looking to make a purchase in the next 12 months? Alrighty, so let's get started.
Into some numbers. Yes.
Right, Market Watch. So the performance for December 2024, we always look at the data from three main houses. So CoreLogic, SQM Research, and PropTrack. And so here's the summary table. Okay, right. Scott, would you like to cover off Sydney, Melbourne, Brisbane and Adelaide performance for December 2024?
Sure, Deborah. Take us through those cities. Just one caveat for the audience up front. We are operating in a lower volume month for the month of December. As you all know, a lot of people are on vacations and so forward. So we've got less sales data behind these numbers. But we're going to present them as they've been provided from the data houses that we follow. So for December, CoreLogic has the house market in Sydney down 0.7%. SQM, a much larger 1.1% fall. That's in their asking price data. PropTrack had Sydney down, but just 0.3%. So that's a pretty consistent down from all providers. Rolling on to Melbourne, CoreLogic showing our largest capital city fall there, down 0.8%, quite a large fall. But interestingly enough, SQM has their asking price data up 0.8%, and PropTrack negative 0.6%. Well, that could be due to sales volumes and so forward. We will see what happens, going forward, I think, on Melbourne. Rolling over to Brisbane, up for the first two. CoreLogic up 0.4% for the month, and SQM up a larger 0.8%. PropTrack said the market was flat there for houses. And finally, Adelaide, CoreLogic up 0.6% for the month of December. SQM about flat, up 0.1%, and PropTrack had it slightly negative at 0.2%.
Okay.
We'll roll back over to Deborah to take us through our next set of capital cities.
Yes, Scott, for Perth, Hobart, Darwin and Canberra. So looking at Perth, which is really starting to make some changes. CoreLogic says performance was up by 0.6%. SQM had asking prices of up by 2.7%. So the sellers are obviously pretty confident. And then PropTrack has performance at just 0.4%. Then Hobart, CoreLogic down by 4%. Asking prices of SQM up by 1%, and PropTrack no change. Darwin up by 0.5%. SQM says asking prices there are up 3.6%, which is a real standout, isn't it? And because Darwin is such a small market, if there's one or two really big purchases on the market, it can influence the entire data. Plus, of course, going back to your point, Scott, about December being a smaller activity month. Okay. PropTrack has Darwin negative 0.3. Then we have Canberra up by 0.6, SQM up by 1.1, and PropTrack down by 0.9. Anything else you want to add about the December data, Scott?
Just maybe just hitting that national line, even though we don't put that much attention on a national figure. I mean, it is a month of negativity for the country. For the country as a whole, this is blending all the cities together.
Yeah. But like it's only for probably a sales period of about 2 weeks.
Yeah, I yeah, I guess my other note would be this may be just as interest rates really bearing in a little bit harder. It's been a long time now of interest rates at this level, and a little bit more stress out there from sellers.
Okay, so into the forecast then. What we wanted to do today was look at all of the factors that are going to influence property prices over the next 12 months. We have got quite a few here, so we'll whip through these. Then we will look at what the data houses have actually forecast, and then Scott and I will make our forecasts. But kicking off with one of the bigger factors. So the first one here is elections. So in 2025, we have WA, West Australia. They have their state election, scheduled already for the 8th of March. And then the current game, particularly for someone like me, I like to, bet on when the next federal election will be. It has to be before May, but it's up to the sitting government to actually say when they want to go. So it's basically up to Albo to nominate his date. But we've got some key ways to guess. So first of all, the federal government needs to let everybody know and have, they have to give notice. And so we'll probably need at least 4 to 6 weeks of that from when they actually make the announcement before the polling can actually commence. So, we're in mid-January now. Is it possible to have an election in February? Maybe, but it's expected that the feds won't go before WA. The other factor that we can also talk about is the fact that the federal government, has pulled the budget back to the 25th of March. So normally it'll be, I think, the second Tuesday in May, they would, hand down their budget. But what they've actually done is change the schedule in Parliament so that they will be giving that budget announcement on the 25th of March. So I'm betting that they will announce that the election will be held, like they'll tell us the election date after the budget. Then the other thing that we've got to think about is that we've got Easter and Anzac Day. So Easter is, I think, like around about the 19th of April. So it'll be towards the end of April. And of course, we'll have Anzac Day, which is the 25th of April. So I would expect it's going to land probably back after that Easter weekend. That's my bet for it, but who cares? All right. So the other point about this is that typically buyers and sellers will quieten down just before an election. But Scott, what's your opinion on the federal election for this year?
Yeah. I mean, looking at it from an outsider, we just don't see that many differences in the two parties this time around. We're not seeing Bill Shorten going after negative gearing. Property investors don't seem to be in anybody's scopes for attack via taxes or other anti-landlord legislation. Really, the big factor here may, in fact, be coming from the U.S. as Trump takes office and is doing some things.
Some
things. That's what I'll say.
Yeah. Okay. Alrighty. Well, thanks for that. Okay. So our next item is interest rates. So Scott, would you like to cover what you see the changes for interest rates and the chatter at the moment and how it might impact the market.
Sure. So, I mean, it's interest rate expectations are constantly changing. If you're out following the markets, and the markets are making bets on when these would occur, there's a very strong market expectation for a rate cut in February, which is backed by two of our banks now,
Yeah.
CBA and ANZ. So they're betting there's over a 50% chance we get the first rate cut in February. The others are a bit later, starting in May. Really, there is a third and small possibility, though, and that's something we're at least discussing, among our inner circles. We're watching the Australian dollar and its plunge against the US dollar, and there is the possibility of a fall below 60 US cents. And some of the market forecasters are saying that could force the RBI to actually hike rates.
Yeah.
Be a very surprise and unexpected move. So really just kind of a lot of uncertainty there. But, over the year, Deborah, I mean, I think we all feel come the end of this year, we will be seeing a market where there have been several interest.
Yeah, exactly. And so that brings up the issue of when to take action. So what have you been hearing in the market from buyers about this?
Certainly, we're seeing a rising chatter from people hearing a lot of talk about interest rates, wanting to get out ahead of that first cut. And the longer that this has gone on, that pool of potential buyers has been rising. So the queue is getting bigger who want to jump in, and you do not want to be on the back foot just in case we would get this rate cut in February. You could have done your planning. You could have been out in the market looking by then. So I think we both feel the earlier you can get involved and focused on your property plans and looking to buy something this year, the better.
Yeah, it's definitely not the only influence, but it's definitely a big one. And really, from what I'm seeing in the pricing and the stock levels, it's that if you're looking for a bargain and want to buy really good value, now's the absolute time.
Yeah.
Like you can't wait until the first cut.
No.
But anyway, anything else you wanted to mention about this slide?
No, I think that was pretty good.
All right, next up is population. So, Scott, would you like to throw some insight into this and why it's an impact on pricing?
Sure. Well, rising populations, in any particular areas is obviously going to increase demand for housing. We've got data here through the year ending June 2024 across our different states. And you can see the largest population increases occurring in New South Wales, Victoria, and Queensland. So those populations have all grown over 100,000 people. That population growth comes from a combination of natural population growth, which is births minus deaths. Secondly, are new people arriving in our country. So that would be our legal immigrants that are coming from other countries. And then to figure out what the population is in a state, we need to figure out who's left the state to move to another state. So that's our net interstate migration column. I would probably note a few things on here. We're seeing a very high population growth still in Western Australia and out in Perth.
Yeah.
Driven by the jobs and employment prospects out there.
Yeah.
Victoria is growing maybe faster than what we might think, as we kind of get into talking about its economy later. So it's still a large and rising population. Melbourne will eventually be our largest city in population if it's not already. And I did find the stats on Adelaide interesting because really the population, other than immigration, is basically flat. So it's not people are, a slight number of people leaving that state, and the natural rate of increase is very, very low. So,
Yeah. Mm.
so that
Okay.
kind of does it on population. And I think we were going to talk about the jobs picture and the employment situation by state, Deborah.
Yes, so I'll cover this. Um, the point when we're looking at the unemployment rate is that even levels are 5%. So that means that at 5%, you have enough jobs for all the people who are applying for them. Anything lower than that means that we have got more jobs and not enough people to fill them, which is what we're hearing endlessly about in the construction industry. So you can see here that New South Wales is sitting at 4%. Victoria, they're doing a little bit better, so they're closer to that 5%, probably because of all those people going into that state. Of course, the drama is Queensland, and once we see and WA. So once you see these rates dropping, it does mean, number one, that you've got a growing economy, but also that employers will have to start paying people a little bit more to compete to get their employees. So just something to think about. We always want to keep an eye on that. And on to our next factor. And Scott, can you cover this slide? So this is about foreign investment.
Yes, so we're looking at several years of data of foreign investment into, I guess, various forms of property into this country. And we did witness quite a large plunge, in the kind of 2019, 2020 timeframe.
That was COVID.
It was kind of COVID related, and a slight increase from there, but we're nowhere near the levels of 5 or 6 years ago. I put some of the blame here on taxes that our state government is putting on foreign investors. We are charging many of these people 7 to 8% in an extra stamp duty on top of what they're already paying to buy a residential property here. And there's also land tax surcharges, which can be as much as 2 or 3% of the property value. So that is, I think, having an impact on foreigners coming to sort of invest here. Also, the Chinese are sort of struggling with some of their own local economic issues at the moment. They just really have not bounced back out of COVID, back to the old China, and are facing a very large threat from incoming president with his tariffs. And we have kind of got a newcomer we are watching, which is the India market, and obviously we're aware of rising immigration coming in from India, and more investment as that country really takes a look at Australia as a place, at least its local population. So Deborah, I guess kind of back to you on supply and building approvals here. It's obviously something very important to the equation.
Yeah, okay. So, of course, currently we haven't got enough dwellings to house all of the people that want them in Australia. So, when the federal government was elected a couple of years ago, they announced that they wanted us to try and build 1.2 million dwellings by 2029. To do that, we need to build 240,000 dwellings, which means about 20,000 a month. And as you can see by this slide here, so these are houses, these are units. You have to add those two amounts together to get the levels. But basically, we are just really falling behind every month. And in fact, when Tim Chalmers made that claim that we were going to build all these properties, construction dipped because of the cost of construction and all of the planning restrictions that are, inherent in the local and state governments. So it is a big problem. The government is trying to fix it, but they've really got to just strip all of those costs out, because the developers just have to pay so much when they actually build a property. It's really bad. But anyway.
I think also the cost of construction is a continued problem. I mean, we're already seeing price increases come in from house builders going into this coming year. So you would think after several years of large price increases, we would start seeing some stability in the price of what it costs to build a house in this country. But I hate to tell people who are going to be building, expect to pay more this coming year. Materials costs are still rising. Builders are looking to replenish their tills, and they've had some rough years. And as we've talked about, just not enough construction workers in this country, meaning it's just very expensive for them to get trades. They're out stealing trades from other builders in some of these very tight markets.
Correct. All right. The other factor that we always keep an eye on is supply of properties available for purchase. And so towards the end of December, there was a lot of talk about this massive increase in stock, which is just like the media trying to find a headline. And so while there has been a little bit of a bump in supply, in properties on the market, you can see through this that it's not really that much of a bump. And in fact, you can actually see it starting to downturn. So stock is starting to be absorbed by all the buyers. And what I have always said is that for everywhere else except for Victoria, what will happen is people who are thinking about putting their property on the market, if they can see that then that sales or that the prices are starting to soften, they'll just hold back. They won't put their properties on the market. They'll wait until a better time. Of course, Victoria has got all of these extra land taxes and property legislation that's driving out all of the owners. So that's a different situation. And Scott, did you say you saw something where you said stock levels were up by 12%? What was that?
There was a Melbourne statistic, actually. It came out and it said that the listings were at a 12-year high there, which would just give you sort of some idea of how much property is hitting the market there.
Yeah. Anyway, so it is something to think about. But now let's put it all together. This is exciting, the forecasts. Now, if you're someone like me, like seeing all these numbers, it's like, what on earth is that? But someone like Scott, he likes to see the data like this, don't you?
I am a data person, and we like to see rows of it and numbers and averages and ranges. And, Debra and I took you through Lewis Christopher's forecast from SQM in detail late last year, and we've got them on the left-hand side of the chart. But we've also gone out and gathered two from, property data companies. So we've got PropTrack and Domain. And at least two of the major banks have been willing to stick their neck out and put some numbers on some capital cities. So we've got NAB and ANZ. And I thought we'd kind of briefly take you through these. We're not going to read all the numbers on the charts, but maybe just highlight a few things we're seeing out there. And I'll start with Perth. Louis led off with a very aggressive forecast of 14 to 19% growth for Perth, that the other companies and banks are kind of not as bullish, I would say.
Yeah.
Consistently, they are all projecting growth in Perth for the coming year. Brisbane is pretty similar. Again, Louis was second bullish, I think, on Brisbane, expecting growth of 10% plus for the year. And again, all of our other providers are expecting growth, but at much lower levels, from sort of 2 to 7%.
Yeah.
Still all positive. Small city Darwin, we didn't really have that many data points to look at there, so just touch on a 0 to 3% growth from PropTrack, but they are kind of quite conservative across the board on all of their forecasts. And I'll do Melbourne yet, which Louis did stick his neck out on, I thought, by telling us that that market could fall 5% this year in his base case. Have not really seen anyone else out saying that the decline could be that much, whether they are in fact more bullish or whether there's a bit less courage from some of the other people to say that about a capital city. Most of the other ones are expecting a low amount of growth for Melbourne in the coming year.
Yeah. Okay. So
back to you, Deborah, maybe to cover our favorite city, Sydney, and a few of the others.
Okay. Yeah. All right. So looking at Sydney, once again, SQM have said that they're expecting a contraction in Sydney. Yeah. I think he's dreaming, but whatever. And PropTrack, more positive. Domain, still conservative, but forecasting an increase, as are the banks. And really the reason for that is that when Louis does his forecasts, he does them probably, he puts it out in November, but he was looking at the data and talking to people in October. And so things were starting to turn in Sydney then. But as I said, what I expect is the vendors in Sydney will just go, oh no, I'm not getting my price. I'll just wait. Because, now we're talking about the RBA potentially dropping the interest rate. So they're just going to act like Sydneyites and they'll just wait. Yeah. But of course, they won't be doing that in Melbourne. Anyway, okay, and so back to Adelaide. So Louis gone, very positive in Adelaide. I personally think he's crazy. I do believe it's a blip, but we'll talk about that later. We're talking about them at the moment. So Louis gone very bullish on Adelaide. PropTrack just more conservative, but everybody is basically saying, good performance by Adelaide for the next 12 months. Hobart, negligible all along. Canberra, and I really think everyone's on the money here. So Louis gone negative on Canberra. PropTrack, not much change. Domain, they're predicting a little bit of an increase, but anyway. There is the federal election there. NAB didn't have an opinion or no change probably. And ANZ up by a little bit. And then to look at the capital cities. Now, we always put this rider out when you're looking at this one line because it's very, very high level. And really, it's just another piece of information, and then you have to look at more detail to look at the suburb level and then also at your property type. So just be careful about that. But the RBA kind of likes to see are prices trending up or are they trending down? Just to sort of give them a high level of what's happening with fortunes. Okay, all right. So on to our predictions for not only 2025 but for the next 3 years. So Scott, would you like to cover our forecast for Perth, Brisbane, Darwin and Melbourne?
Sure. We've done this at quite a high level because obviously it's quite difficult to put numbers on any longer periods of time. But I think what Deborah and I can both offer are our perspectives based on all the data we've analyzed, all the infrastructure that's happening, everything that we do in our jobs on a daily basis that helps us come to a determination on where the right markets are to invest we have made an attempt at putting down on a slide here. So for Perth, Debra is saying yes, good growth for the 3 years. My personal opinion is yes. I just am caveating it, being a little bit more selective. We haven't done that much out in Perth lately, and have done more cash flow and dual income properties out there in houses. But in summary, we're going to say yes, that's a market for your list and get good growth. And then we're going to move to our favorite market, Brisbane and the broader Southeast Queensland market. We're including the Gold and Sunshine Coast when we say that. And we're adding an exclamation point here. Debra?
Yeah.
Yes.
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 Can I just say something? I'm trying not to butt in, but you know what? So yeah, you included Sunshine and Gold Coast, and really, it's really starting to look like Toowoomba is starting to move as well. So west. But anyway, back to you.
So yes, so potentially Toowoomba as well. We'll add to that. But Debra was a strong yes. Notice the exclamation point. I will mirror that. Yes, exclamation point, and summary. That is coming across as our top market. And I really just think we are heading into a phase in that Brisbane market where the infrastructure is going to be needed for the Olympics. We're going to see so much money spent on new stadiums, concert venues, train lines, a potential heavy rail line to the Sunshine Coast. There are upgraded light rail lines happening on the Gold Coast. It's just such an enormous amount of investment. We saw this happen in Sydney with the Olympics. Prices are high. I think we will both admit, look, it is an expensive market. It's not a cheaper capital city, but we are heading to a point where that entire Southeast corridor is just becoming our, really our second premium market to Sydney. And still, I think, are very good opportunities for investors to buy there. Darwin, pretty simply, no. Too small. We don't like the weather and cyclone risk up there. There's a lot of volatility. Insurance costs are high. I just think you've got to be really a local expert specialist to be getting into one of those smaller markets and wanting to put your money in there.
Or wanting to live there.
Or wanting to, live there. And that could be a house or even a unit in the city up there, Melbourne, I think we have just a little bit of difference in opinions here. Debra, you want to start off with a relatively strong no, would we say?
Yeah.
I'm almost a no, but I'm slightly gonna say yes in sort of selective areas. And really, we are looking in Melbourne at very affordable houses that can be built at very low price points. We're talking 500s and 600s, getting into the market relatively early, maybe not even completing those properties until the end of the year. So we're looking at then, potential growth to come in the next 2 years. But I do think you need to be very careful in Melbourne, and the taxes are not going away without a change in government. And there are some other things that really need to happen to really see that market resolve ourselves. So we'll end that one with mixed opinions between the two of us. And then Debra's going to take us through Sydney and our other smaller cities.
Okie dokie. Yes, so I'll cover Sydney, Adelaide, Hobart and Canberra. So for Sydney, I definitely see it as still having a lot of potential for growth and good returns. Plus, the other thing that we've really got on steroids in Sydney is really good buying, where you can buy one property and maybe turn it into two, like a duplex, or four, like a manor house, And so there's just too many opportunities, but they are quite technical purchases. For home buyers, there's still plenty of opportunity. It drives me crazy that the media still says it's really still very hard for first-time buyers. There's some very affordable, great opportunities in Sydney, and where is capital growth going? It is still going up because it's still putting a lot of people into the area. The government is putting a lot of money into infrastructure, the new airport, building a new city out near the airport. So there's too much going on. All right. And so Scott agrees, maybe not with the passion that I have for it, but yeah, Scott is a yes. And so overall, sorry, are you trying to butt in?
Yes, I'm going to butt in. Not to change my answer, but just I am talking broadly to Newcastle, Wollongong, the Central Coast area, just like Southeast Queensland. We see those areas growing. Sydney prices will continue to go higher. They're the logical point for a lot of people to be pushed out. And as you well know, Newcastle's just becoming such a great livable city.
Yeah. It is. And what is actually happening? So on the Central Coast, where I never used to even consider, now it's starting to look very good. So yeah, that's also improving. But anyway, all right. So Adelaide, I'm a no on Adelaide. Population way too small. There is an increase, a bit of a run on it at the moment, but I don't see it lasting because there's simply not enough jobs there. So, you might move down there, buy an affordable home, have a family, kids grow and go, because what is there for them? Like, I know I'll be smashed by, the people that live there, but and also I think the blip in price is a bit of a reaction of people trying to sort of kind of stay close to Melbourne, but get themselves out of Victoria, because the South Australian Premier is really offering a lot of incentives for developers and investors. But there's just better places to buy, so I'm a no on Adelaide. Scott is also a no for various reasons, and for similar reasons, isn't it, Scott?
Yeah, I would say the same. And in our new property space, just not that many desirable areas close to the city. We did deep dives into Perth and Adelaide a couple of years ago, actually, and really came back believing Perth was a much better place to put your money.
Yeah. Population, infrastructure, and jobs. Yeah. So we're no on Adelaide. Hobart, no. Like I've always said, no. Hobart and Launceston. Generally Tasmania, it's an island. Like, you're going to be cut off, which we've experienced. And also the people who are buying there, a lot of them are retirees. So you're not getting that really good family demographic that you really need for a growing population and for growing, rental demand and property prices. But we are. I hear there is another little tiny blip in Hobart again, but it's going nowhere anyway. And then also Canberra. So I've always been a no on Canberra. My one main reason is because there's only one real employer in Canberra, and that's the federal government. And I have seen what happens when the government when there's a change in government and they slash jobs. It's just not pretty. The other thing that I really don't like about Canberra is it's Crown land. So you lease, plus they've got that land tax thing that they in Canberra where you pay land tax every year.
Yeah, everyone I think is paying land tax these days in Canberra because they've moved away from stamp duty. So, I think we're all hopeful other states don't follow the model.
But anyway, all right. And so Scott is also a no. And in the summary, we've got we just see Canberra's too risky. Regionals, Now, in forthcoming episodes of Market Watch, we will start to cover regionals and probably the states in more detail. But for today, we're cutting it off there. Overall, I would say, positive. But of course, you've got to make sure that you buy the right thing for your particular circumstances, and also, matching the location to the property style.
Yes.
Is there anything else you'd like to say, Scott?
Covered it very well. Well done.
Okay. All right. So that's it for us. Thanks again for visiting and watching. And if you've made it this far, make sure you tune in for our next episode, when we will be covering off the impact of land tax and why you should check it before you actually make your purchase. We'll also be covering off the rental market. If you want to be notified about when the next episode is available, make sure you subscribe. And if there's any topics that you would like us to cover, please reach out and let us know. Our contact details, so both Scott's and mine, will be included in the description below. Is there anything else that you would like to say, Scott?
Just appreciate everyone's comments. Have a great 2025. And the Trump inauguration is just around the corner.
Yes. So that will be what you'll be focusing on next week, won't it?
Well, I think I'll be avoiding it more than anything else.
Well, look, it's always a good show, isn't it?
Certainly. We see many ex-presidents attending, the event as well.
I wonder if we will see many. But it's snowing pretty badly there at the moment, isn't it? In Washington.
I haven't been following the weather.
Oh, okay. I love watching the snow. All right. Well, with that then, thanks very much, Scott, and we will say goodbye.
Bye, everyone.